Welcome to the insurance series. I'm William Freitas, and today we've got Glenn Hanna on the show. Glenn, welcome to the show.
No, thanks, Will. Thanks for having me.
So Glenn's from HMD Insurance and a partner of ours that we work with. And Glenn, I'm really keen to talk to you about scaffolders risk and scaffolders insurance specifically, and what particular areas of their business that they need to get covered for insurance and what benefits there can be. But before we do that, I want to dive into your background and a little bit of, I guess, how you got to where you are today. Everyone falls into insurance or has their different experience, but I want to get specific to yours. So tell us a little bit about you and how you got to where you are today.
Yeah, no, thanks, Will. Like most people, I sort of fell into insurance. I applied for a role with Aon in New Zealand. It was my starting point. At the time, I didn't actually know what Aon did or anything much about what an insurance broker was. And then I got tapped on the shoulder, asked to move to Australia with Aon. So I moved across with Aon into Australia in their corporate sales function. I own risk management consulting. Enjoyed the small niche, which is why I set up HMD.
From what I understand, HMD sort of look after SME clients as well as larger clients. I mean, how relevant is that? And tell us a little bit about the internal secondment, because I guess that's probably something that not a lot of people within insurance and within the industry potentially listening who have exposure to that. Tell us a little bit about those two examples.
Yeah, no, sure. Look, and certainly in terms of HMD where we are now, you're quite right in pointing out that we are predominantly an SME broker. We do have some larger corporate clients, so I still have the opportunity of applying some of those analytical skills, particularly doing loss simulations to really work out that optimal point of risk retention, risk transfer, what they're really looking for when a broker in terms of service. You're sitting on the other side of emails and you're getting them from the broker and you're going, you're not answering my question.
Yeah.
So for me, that's, really highlighted the importance of customer service, really taking the time to understand your client, what they're really looking for, so you're able to respond to their daily needs.
And so how long was the secondment for?
It's 12 months.
12 months.
Yeah.
And would it have continued?
Yeah, and I did that for 12 months, went back full-time back into Aon. I'd sort of served my time, and it was a good opportunity for me to move on and do other things.
Yeah, I've always found that interesting, right? Because we manage clients, ranging from SME clients to ASX-listed clients, but we've never really had a situation where you've had to tender to put in employers in a secondment. So I thought that was quite interesting.
And it's becoming a relatively common thing, I think, for some of the big clients. So the company that I actually set up in between the risk management company, part of that was providing an outsourced insurance and risk management function. Yeah. A lot of organisations don't need a full-time employee or can't afford or justify a full-time person.
Yeah.
And we're certainly
the term insurance broker, where it's completely different. If something goes wrong, you might not get paid by that insurer, which is why it's very risk focused, which is why I like that angle around risk management specifically and having an outsourced risk management.
Yeah, and it's definitely the advice piece. I mean, that's what we're there to do. We're there to understand client need and provide advice. Yeah. And quite often we see a number of clients that are new to us where we review their insurance program. If they've done it themselves, often there's a real mismatch between the risk and insurance that they've got. They don't really understand the terminology of insurance.
Yeah, exactly. And I think that's potentially where the insurance industry gets such a bad rap, where people buy policies that they're not necessarily across and it may not be appropriate to them. But wrapping that all into where you are today and specifically scaffolders risk, because you've got a particular agreement?
Yes, or facility.
You would call it, particularly for scaffolders. So tell us a little bit about what that is and then what that entails.
Yeah, sure. So we work very closely with the Scaffolding Association of Australia. Part of my role, actually, while I was at Gallagher, I didn't mention before, was I ran their scheme and affinity business for a number of years, worked very closely with our New Zealand counterparts, and together we jointly created a number of trans-Tasman facilities for a large number of, sort of financial type companies like real estates, accountants, those sort of things. The Scaffolding Association in New Zealand, SANS, is very well established. They have their own product that's attached through their member base. One of our colleagues in the IA network actually manages that facility and set that up. The Australian Association reached out to them and said, hey, we've got a real problem in Australia. A number of scaffolders are just really struggling to get insurance. Rates are going through the roof, and a number of our members are uninsurable. Is there anything you can do to help? So Jason Harkness, he reached out to me and said, look, can you meet with the Australian Association? We went and did that. We understood the issues, and we then worked with them to establish a product exclusively for the members of the association in Australia.
And tell us a little bit about the product. What does it cover? Naturally, it's going to include public liability, but what other particular coverages does it include?
So the core product itself is public and products liability. We do provide all the other insurances that a scaffolding business would need, but the one that's exclusive and unique to us is the liability policy. What we did initially is we went and surveyed a number of members. We got a really good feel of what products were out in the market, what sort of rates they're paying, the covers that they need. And we really quickly realised that there was a number of deficiencies in the current market. There was only one or two competitors who were providing a product. There's certainly the appetite for insurers, for scaffolders in Australia has diminished. The only providers were out of London via underwriting agencies in Australia. And when it came to the more complex, larger scaffolders, there was really only one market in Australia who was providing coverage. They were, I guess, taking advantage of that situation. Pricing was going through the roof, and they were picking and choosing who they wanted to insure because they were the only player in town. We initially tried to work with them. They weren't really interested. They believed that they had the dominant market share. And look, to be fair, it would be really hard for them to give us a discount on product clients where we're trying to attack that are sitting with another broker that they're already holding as well. So I can understand the situation. So we then went to London. We created our own product, and we brought that back. It took probably 6 to 8 months to get off the ground. It was very challenging trying to find markets to support an industry that insurers would probably put in their top 5 least favourite liability risks. The perception of scaffolders in worldwide is that they're a very poor risk with a lot of claims. And I think the reality is that's probably the history of the industry. But where we differentiated ourselves and were able to secure capacity was that because we're working with the association. And to be a member of the association, there's certain hurdles that you need to achieve. So we're dealing with the higher end scaffolders compared to the smaller, lower end guys. There's key principles that they need to follow, standards that they need to follow. And so to be part of the association, we're already working with the higher end scaffolders in the Australian market. There's also a real focus on improving the professionalism of the industry. So there's a lot of risk management that's going into place. They're putting together standards that are far exceeding those that are already in place. So to be a member of the association, you need to adhere to these standards.
And so that's really what helped get the deal across the line.
We wouldn't have been able to do it.
And that makes sense. From an underwriting perspective, the insurer is going to want to see that the client has considered various different risk management elements. Because you're right. Most people see scaffolding as a poor risk or with poor claims, I guess. But definitely with the implementation of additional standards going to improve. What are, I guess, some of those underwriting metrics that, insurers would want to see for clients to include?
So the key things are ensuring that they've got no safety breaches, that they're working to the standards. We're seeing really strong work health and safety practices. And it would be fair to say they are now working really hard to ensure that they're operating to the highest level. And it's really their safety record. And there's a lot of inspections that happen on site from work authorities to ensure that sites are safe. A key part of what we do is ensure that they've had no breach notices and those sort of things. But everyone who is a member of the association is certainly operating at that higher level of risk management compared to those that are not. Not to say others out there are not, but everyone who's part of the association is working over and above the minimum standards within Australia.
And I guess the challenge is for a lot of the smaller operators is do they have the budget to roll out some of these risk management procedures to obtain the insurance, or do you think it's something that's pretty easy to adhere to?
If they're doing their job properly,
Yeah.
they'll be hearing. And it's adhering to the Australian standards is really where we're at. And they're well established. They've improved over a number of years. And it's just making sure that the businesses are operating in a professional manner, just like us in the financial services industry.
Yeah.
There's guidelines that we need to follow as a professional provider of services. They're exactly the same.
And talking, over and above the basic Australian standards, are there any elements of risk management that you see clients implementing that sort of help with sort of risk reduction around premium and excess levels? Anything that you can see there?
It's probably not more so their practices, but the way that they engage with their employees. And we're finding that a number of the scaffolders had actually set up multiple entities, which then created a subcontractor arrangement. They'll have a different employment entity versus the one that's a contracting entity, which certainly opens to workers' comp claims or work cover recovery claims against the liability insurer. So for us, a lot of it has been working with them to really understand the liability implications of how their business is structured.
Kind of has me thinking around, particularly around employment. What we see quite a lot happen in the construction. Scaffolding is no exception to that. There's definitely the use of labour hire, and I think some businesses, depending on the usage of labour hire and what percentage they utilise, can make that quite a tough insurable risk.
Correct.
What sort of percentages are you seeing insurers are comfortable with, not comfortable with? How do clients improve that? Obviously, contract requirements is one of those things. Insurance requirements is one of those things.
And I guess the benefit of our product is that it is the most broadest product in the market with the broadest appetite in terms of the activities that the scaffolder undertakes. So in terms of complexity, we go from a small residential scaffolder who works predominantly under 10 metres through to a large scaffolder who could be underpinning bridges, working 200-300 metres above the air and CBD type work, wharves, airports. They've got airplane liability sort of exposure. And then the other side to it is whether they have employees or whether they have subcontractors or whether they have labour hire. And we see that there's a real mix. Our product will actually have some companies that are pretty much subcontractors or labour hire, the hire access, particularly into the worker type claim, where we'll see those organisations.
Work cover take the employer and sue them for maintaining a safe workspace, which ends up being a public liability issue. Any old public liability policy is going to be sufficient, and it really isn't. Now, tell me a little bit more about the product. Naturally, public liability is going to cover personal injury and property damage, right?
Correct.
Is there any scope to include some level of professional indemnity coverage? Is there any need for it? Is there any element of design of scaffolding that occurs? Tell us a little bit more about that.
There is, and we do have an E&O extension as an option. That's not a full professional indemnity policy. Our current liability policy will cover the design aspects that are in relation to the product that they're selling. So within all scaffolding, there is an element of design. At the moment, if it's anything that's complex, it'll be signed off by an engineer. So a third-party engineer will sign that off. We're not covering that. However, for the designs that they're doing, most of them are using standard software packages that they have or 3D scanning that will go in a scanner room and do a scaffold plan. So whilst it is an element of design, it's not actually attaching to the ultimate building structure. Scaffolding is deemed to be temporary works.
Right.
So from that perspective, we're covering that piece as part of what a scaffolder does under their public and products liability policy. We are finding that contractually, a number of the large contractors are requiring the scaffolders to have PI or an E&O extension, and we're able to provide that under the policy to ensure that we're meeting those contractual terms. But the reality is most of them are able to remove that requirement out of the contract because it's only temporary works. It's not actually part of the overall structure of which the contractor is building. Yeah,
and I can see a real need for the E&O exposure. E&O being errors and omissions, quasi watered down version of professional indemnity. I can see the need for it because if there's a financial loss that results from...
They need to pull it down. That could take 2 weeks and delay the project, and there'll be some financial losses passed on from the builder to make sure that they carry that through.
And, you know, covering things like liquidated damages isn't always easy, but, you know, financial loss is definitely what you're looking to cover for sure. Tell us a little bit, you touched on it briefly, but tell us a little bit about some claims examples that you've got, because this is the juice, right? This is what people love to hear, because many people think, oh, I'm buying a piece of paper I'm never going to use, but in reality, you know, there's definitely a use case for insurance. I imagine scaffolding is one of those areas.
Yeah, and look, we've been fortunate enough that under our facility so far, touch wood, we haven't had any claims. I have inherited a couple, and look, typically they'll take probably 3 to 5 years to manifest anyway, and the majority of the claims that we're seeing are work cover recoveries. So there's 2 that we've been involved in, and you know, interestingly, this comes back to the point before we were talking about the contractual liability and the arrangements that they have with their clients as well. The first one was they provided labour to another scaffolding business, and it was a labour-only contract. So they went and worked for another scaffolding business. They erected scaffolding. It was the other scaffolders' swims, plan, scaffolding. They were under direction of the other scaffolder. They actually erected it perfectly. There was no breach of any kind of standards or anything like that. 2 weeks later, a different organisation was dismantling the scaffold. An individual was injured during the dismantling process and then had a work cover claim. Work cover has then come back against the scaffolder and our client who provided the labour, saying that that piece of scaffold was incorrectly erected against best practice. Now, if we look at it, scaffold which would have made the piece that they took down lighter, but the piece that they was compliant. 2 people dismantling it. There was not support people there to help this individual. The scaffolder didn't provide. So look, our client's been named in it. So what we're finding is the majority of the policies, it's really a defence policy against these type of claims. Work cover, take a shotgun approach against all parties involved. And unfortunately, we've got to defend those matters.
And just to add to that, that really is defence costs being legal fees, and that's why it takes 3 to 5 years, because these cases can, you know, develop over time, and there's specific details that need to be deliberated, obviously, and that's why it can take quite a bit of time.
And working through that claim, I think the key things for me taking away are the importance of having strong contracts in place with your customers and suppliers. In this particular case, it was really just a work order to provide some labour. Whilst it's still going through the courts as we speak, we believe our client is in a really strong position, and we're expecting them to not have anything awarded against them. But what would have helped is if they'd had clear contract in place saying that they're providing labour only, they're not in control of the site, they're not providing the scaffold and all the things that come around that.
And so then to clarify, I mean, this is an interesting point, because more broadly across construction, a lot of people might buy a policy that doesn't include on-hired labour coverage.
Correct.
Right?
Yep.
This does.
Correct, yes.
And that's a real key delineation that people need to get clear on. If you've got a policy that covers you and then you pass on your staff to somebody else and all they're doing is labour only, going to cover you.
And we do a number of those. It can be done.
Contractual requirements and the types of contracts they have in place. I presume the insurer will want to see the contract that they've got in place?
They don't, but we are very clear in which they operate, the way that they've structured their business. Probably the most important piece of information insurers want to see is their SWIMS document and how they're managing the site, the induction, and site plans.
Incident reporting, safe work, No, exactly right.
And look, at the end of the day, it's insurers' money. They will control the claim that best suits their interests once it gets to this point, but we certainly want to work well represented in the best way.
It's going to offer to settle unless they believe they don't have a good case to defend. And
Correct.
I think that again speaks to having a good level of risk management in place, so that the insurer has that then reduces their...
And certainly through this across the country, there are a number of product suppliers coming in who are looking at innovative ways of ensuring that these sites aren't being tampered with.
What's your view on the market and where that's going and how we can protect against this?
Yeah, well, certainly from a scaffolding, most of the most likely management liability or directors and officers type claim that we're going to see is some kind of OH&S type of breach where there's some injury that's going to occur. So for us, it's making sure that we find a D&O or management liability policy that doesn't exclude that as a minimum and make sure it's got the highest sublimit available.
Yeah, and are you seeing any of those insurers providing stat liability coverage for that sort of exposure as well?
There are. So, majority of the scaffolders that we deal with are probably sort of under the $20, $30 million turnover.
Okay, yeah.
And the majority of the standard products that are available to us as advisors are suitable for that. So,
yeah, nice, awesome. And so, naturally, specialising in scaffolding, where do you see the industry going moving forward? Obviously, the association has done a fantastic job with yourselves to pull together a product that helps its members. But what's next on the agenda?
Well, it's really, I think the industry itself needs to continue to improve, and the association's really driving that. A lot of the conversations have been around the training. So if you look at other associations, for example, in the UK, to be a scaffolder, it is a proper course over a long period of time. Whereas here, within 5 days, you can get your certificate to operate at heights. So it's really lifting the professionalism of the industry to ensure that they're all going to work to higher standards. And I think that's really going to drive the risk management and the overall safety of that industry, which will ultimately see that we have fewer claims and we're able to maintain premiums and hopefully get to a point where we can start seeing a reduction in the cost for liability insurance.
And I don't know if you know what this number might be, but do you know what percentage of scaffolding businesses out there might be members of the association versus not?
The association is growing. I guess the agenda of getting a seat at the table on certain regulatory type boards, making sure that they can get access to different standards committees and they can actually change some of the regulation around scaffolding. They're also working really closely with the Working at Heights Association and working together to drive some legislative change that will really benefit the industry and the people. I mean, the core objective of the association is really to make sure that everyone comes home safe at the end of the day.
Yeah.
And the only way they can do that is really lift the level of professionalism of the people that operate, which is the key motive of behind the association. And we're certainly seeing a real positive impact on that since they've established.
Yeah, no, perfect. And a lot of this stems around raising awareness.
It does.
As well.
Yeah.
Right, because you and I being in insurance and highlighting what these claims can look like, it can seem like it's a bit doomsday and we're kind of selling the worst case scenario, but it can happen and it can happen in an instant. It does happen. It's a good way to reframe it. I often say it can happen. The fact is, it does happen, and we've got a number of clients who work through this. So I appreciate you talking through that for sure. Just wrapping up in terms of where you see HMD going. What's your perspective on that?
Yeah, look, for us, we've been operating now 4 years. Couldn't be happier with IA, who we're part of, and the support that we get from the market. We're continuing to grow. We've now got 6 or 7 staff throughout the country. So for us, really looking for the next sort of industry that we can provide a creative solution for. We're doing a lot in the gig economy. We're doing a lot in the support worker space. Created some unique value propositions for those industries. The scaffolders have really opened my eye to identifying opportunities where the risk has probably been misunderstood and there's limited market capacity. And as an advisor, we're really there to make sure that we can provide a solution to it. We've got to be innovative around that and really test the market and push boundaries to ensure that we can deliver a product which hasn't been done before.
Perfect. Thank you for coming on.